All right, well, we'll go ahead and begin. And I want to thank all of our people for joining us this afternoon. Thank you for pre-registering. And also, I want to apologize for last time we attempted this, we had some technical issues that we were not able to overcome. And I apologize to those that were uh, had registered and were ready to go, and we weren't. So, but now we are. This is our second webinar of the year 2014, and it's on an important subject, long-term care insurance at any age, really. It's thought of more for estate planning, business planning, but it certainly can be applicable at any age. My name is Howard Stross. I'm an attorney in Tampa Bay, Florida, and our firm offers client services in the area of estate planning, and we also settle estates, meaning probate and trust administration. We also do a lot of real estate work that includes title insurance. One of the things that we do in estate planning is uh, we try to stress that part of estate planning is preserving what you have. And of course, insurance is one of the first things that come to mind as the first line of defense and asset preservation. And that's what long-term care insurance is all about, because this can be applicable at any age. If a person requires a long-term care because of a physical or a mental illness or an automobile accident, or they fell off a ladder, whatever it is, and they have to have long-term care more than just a few days, the cost of that can be devastating to both the patient himself or herself and also that person's family. So since we always mention that in our estate planning, and then we also, if our clients do have it, we like to review those policies. We thought what better way to review this but to talk with someone who works with this virtually all the time, and that's our guest today. And I want to welcome Jeff Hoskins. Jeff is a CLU, a Chartered Life Insurance underwriter. That's a professional designation for individuals who have taken a considerable amount of additional educational courses and successfully passed an exam to specialize in life insurance. That shows that they have a lot of additional knowledge. And part of that initial knowledge includes elements of estate planning and certainly preserving what one has. Jeff is also a chartered financial consultant, and that again is another professional designation which he earned after extra coursework and examination and a demonstration of practical experience in these financial matters. Jeff, I want to welcome you and say hello, and we'll get started today.
Thank you, Howard. Happy to be here.
And we're happy to have you.
Thank you.
And we, of course, the topic is long-term care insurance, and here's Jeff's smiling face here. You can see he's been providing insurance in Florida since 1987. And for all of you folks that did not attend the University of Florida, instead went to Florida State, I'm sure you'll forgive Jeff for having a BA in economics from the University of Florida.
Thank you for the defense. I appreciate that.
Two great schools. I wasn't born and raised in Florida, so I don't have quite the animosity between the schools, but I know where I came from in Michigan. I moved here in 1984, but it's Michigan and Michigan State. They were always going at it, and also Ohio State. So, Jeff, I want to start with
Sure.
some key facts that I think folks should know about long-term care insurance. And we're getting this information from other what we think is reliable sources.
Sure.
ARP, as an example, states that 70%, that's an enormously high statistic, of all Americans that are over the age of 65 will need some type of long-term care. And then just keep that in mind, and we'll talk about what the probabilities are of people who have a fire in their home. We're going to compare those two. But just remember, at 70%, and on average, people will care for 3 years, and in some instances, I can think of several instances of clients that have needed long-term care for much longer than 3 years. The daily cost of a private room in a nursing home shows here being about $256, and I can tell you that that's, I think, low, really. That's according to a certain organizations that we have tapped into to look at their statistics. That average monthly rate of $3,232, I don't know where that is, but it's higher than that in Florida.
Yes, yes.
And then nearly 40% of long-term care spending is paid for by private funds. So the reason I want to really emphasize this is that I think Jeff and I talked about this before. People are used to buying car insurance, house insurance, life insurance, all kinds of insurance for their boat or things like that. But they're just not used to long-term care insurance because historically the product hasn't been available all that long, and then as far as in its current state, it hasn't been around for very long. Years ago, when there was long-term care insurance, there were so many exceptions in the policy, it was almost not even worth buying. But that's not the case today. So now I'd like to ask Jeff, when you talk to somebody, regardless of their age, but obviously if they are getting older, how do you approach this, and what do you do to try to get their attention on this most important topic?
Sure. I just try to encourage people to realize that at the age of 65 and beyond, until normal end of life or life expectancy, I've always used the statistics. It's about a 50-50 chance that someone on some basis will need some sort of custodial care, which doesn't necessarily mean care provided for 3, 5, or 10 years, but it could be for a shorter period of time. The average stay in a nursing home is somewhere between 3 and 4 years. And oftentimes when we talk about that, and I ask the person if they have any family experience with a family member that having this sort of a need, I just encourage them to think for a moment or two, where would the resources come from to pay for that care? And the most common remark that most people say is they say, well, don't I have a Medicare? Won't my individual major medical insurance cover me? And it's the most common remark that I receive from my clients or prospective clients, but it's also the most common fallacy that most of us just don't believe to not be accurate. So simply trying to encourage people to think or imagine what would happen if the unimaginable occurred, and most importantly, where would those resources come from? Then someone normally says, well, maybe my son or daughter will take care of me, or maybe one of my kinfolk will provide for me, or maybe I'll have to pack up and move and go back to where I grew up in another state far away where I have friends and family to care for me then. But the reality is, and I can only speak from my own personal life, is that everyone in my life, my sisters, brothers, uncles, aunts, everyone is running 100 miles an hour just maintaining their lives, and I don't know who I could fall back upon personally to move in with, and who I could call on to provide care for. So simply trying to encourage people to talk about the reality of the risk that we all bear, and having some sort of a very long-term or even a permanent custodial care need that is not protected or covered by, in most cases, any insurances that any of us have. And I try to talk from that approach, Howard, and see where we go from there.
Well, I'm going to make sure that everybody understands what long-term care insurance
Good point.
is, as far as the basics. The vast majority of people we both talk to are not lawyers or insurance people.
Right.
So, and even if they are lawyers or insurance people, they may not be in this field. They may not know anything at all about long-term care insurance. If you're a criminal defense attorney, I wouldn't expect one to know about long-term care insurance unless they just happen to buy some. But
Sure.
Tell us how would you describe long-term care insurance?
Sure. I'll give you the best textbook definition that I can run off the top of my head, but it's basically someone being able to do a certain number of traditional and typical activities of daily living. And those activities of daily living are typically transferring, say, moving from a bed to a chair, being able to use the restroom, being able to bathe oneself, being able to dress, being able to feed oneself, and then also as the day goes on, be able to remember to maintain proper hygiene, bodily function. So those are 6 activities of daily living. And the way that I kind of always remember it is I always envision waking up in the morning, moving from my bed to my chair, moving to the restroom, moving to the shower, putting my clothes on, going to the kitchen, eating, and then being able to remember to maintain body hygiene throughout the day. So those are activities of daily living. Typically, most of these insurance contracts say if you can't do 2 of those and you're under the care of a medical professional, you're triggered, or the insurance benefits are triggered to be eligible to be paid. In addition to those, if you have a severe mental impairment or an organic brain disorder, that, along with being under the care of a medical professional, is also a trigger for the benefits. And sometimes when I say that, people, they kind of nod their head and they agree with me and they agree with me, yet it's even hard for me to sometimes imagine simply being unable to do 2 of those 6 activities of daily living. For most of us, devastates our life. Imagine not being able to move from a bed to a chair. Imagine not being able to bathe ourselves. Imagine not being able to put our clothes on. And statistically, the number one and earliest typical activity of daily living that goes first is being able to bathe oneself safely. So there's some subtleties to those definitions, but basically that's the main part of it, is the inability to do those functions or have an organic brain disorder and being under the care of a physician. Once that happens, the benefits are triggered under the policy. And if those happen to any of us, usually the situation is severe and profound, and outside professional help is needed for us to make up for those activities of daily living that we can't do for ourselves. And when we bring in an outsider to help us provide or help us assist us with those activities, usually bringing in that outside provider, there's a cost. And it's that cost that typically none of the other insurances that we have provide for, and without the insurance, it's typically dipping into assets, or typically dipping into, and if I don't mean to be kind of rude here, but dipping into other family members' pocketbooks to provide and pay for the care that we need ourselves. And that's basically what long-term care insurance does for us if we can't provide these services or take care of ourselves.
Jeff, have you found that people confuse Medicare, Medicaid, and long-term care insurance? Somehow they talk about the concepts in a way that they seem to intertwine all of them together as if it's like one big system.
Very, very common, and it's not particularly a severe misconception, and with a little talking, most people can delineate those concepts in our mind.
Mm-hmm.
The approach that I take is when you and I have health insurance, and Medicare is health insurance, Medicaid is health insurance, individual major medical is health insurance, that insurance doesn't pay us money. That insurance pays the healthcare providers. And I don't have anything against those in the medical profession by any stretch of the imagination, but that insurance pays them to provide services to us. Long-term care insurance doesn't pay a provider. Long-term care insurance pays you in cash every month to use the money as you so deem to be appropriate to provide and pay for the care that you need and that you want in the home. And when most people get a good grasp of the fact that Medicare, Medicaid, and individual health insurance doesn't provide for these sort of benefits, those insurances pay the doctors and the hospitals. It goes directly from the insurance company to the doctors and the hospitals. Long-term care insurance pays you in cash monthly, literally, and use that cash to pay for and pay for the services that you need to provide for yourself or your loved one's welfare.
Well, what is one of the things that people mentioned to me, and I'm sure you must get this too, is that Medicare will pay for this.
Yeah, regularly. Yeah.
And to some extent, that's a truism.
Yes.
In some respects, but for a very limited amount of time. The very most, under the best circumstances, is that Medicare would pay for 100 days. and that's it. And it doesn't mean that your claim isn't meritorious and that that you're somehow should extend that. They have no ability under the law to extend it. And it also has to be something you have to show the Medicare people that the reason you're there is not just for custodial purposes, but you're being rehabilitated, and that progress is being made, albeit possibly slowly, but it is being made. And there's some other requirements too that must be met. So if someone is suffering from a mental incapacity in some fashion, dementia, Alzheimer's disease, where there's no rehabilitation going to happen, Medicare is not going to pay for any of it. So, and I have a friend who suffered an illness, and he was in an extended stay, and he was able to have Medicare pay for that 100 days because he was in rehabilitation and he was in fact getting better, and he went right from the hospital right to the nursing home, which is another thing one has to do. So some of the rules don't seem very logical at times, or maybe unfair, but people need to know that those are other reasons why they should have a backup plan for long-term care.
Sure.
Which leads me to the age. We've had one client that was 41 years old and became incapacitated as a result of an automobile accident. So when I said earlier that this can happen at any age, I meant that. It doesn't necessarily mean that long-term care insurance is only going to be needed when somebody is 85 years old. It could be 35, or in this case, 41. So what age, however, do you think a person should buy long-term care insurance, particularly in view of the rates that are charged by insurance companies?
Sure. Age 45 to age 55 is the sweet spot. That's really the best years where one can pick up this coverage if they're interested at really affordable rates. Once a person reaches age 65 on a year-over-year basis, the rates for the coverage really start to go up markedly. Usually, age 45 rates are the rates at which the insurance is as low as it goes. In other words, if there's someone listening to this and they say, well, I'm 35, how about I get a move on this insurance? It's going to be even a lot less costly for me than waiting until I'm age 45. Usually the rates are as low as they are at age 45, and they don't go any lower. It just depends what one's budget can bear. The older you become, the more costly the insurance, and then the response might be, well, I think of all the premium dollars I've saved over the years, and I always say that's true. That's true. There's a lot of discount programs out there if a couple purchases coverages simultaneously. Most of the companies offer 20% plus discounts on the premiums, so that always helps a lot. And there's some medical qualifying that is involved in the insurance as well. And it all depends on a person's age and general health status. Most of the companies that I've worked with over the years, it's either a person qualifies or a person doesn't qualify. There's no sort of rating applied or increased premium because the person has a certain medical ailment. Usually it's someone is approved or someone is not approved for the coverage. Over the years, I've had people say to me, well, I can't afford the cost of the insurance. My income isn't such that I can bear the coverage. And respectfully, I feel for them, and there really is often nothing that I can do. On other occasions, I've met a couple people over the years that said to me, why would I buy this insurance when I have quote-unquote money in the bank to cover me? And my response to that has been, I'm happy for you. If that's what you feel to be appropriate for your circumstances, that's wonderful. Usually when people realize that 100% of their assets are at risk to being used to provide care for themselves or their loved ones, usually folks with assets in that manner hesitate and perhaps relook at doing the insurance. So it just all depends, Howard. It's really on a case-by-case basis. There is no specific age where if you do or look at purchasing long-term care insurance beyond this age, it's a fruitless endeavor. It's just what a person's budget can bear and what they perceive to be their needs and what they're willing to do about the needs that they perceive.
Well, I wanted to mention to our folks listening that in my own personal experience, I obtained my long-term care insurance coverage uh, through the State Bar of Florida. They had a program offered at the time, and still do. Um, so there's many different programs out there. Sometimes one can get it in group situations. Now, mine is not a group policy. Mine's an individual policy, but they use the group buying power, I guess, and they
Sure.
also use the bar's analysis of what they thought at the time was a good long-term care insurance policy. Uh, for those people out there that are working for an employer that may offer a variety of different benefits, one of which might be short-term or long-term or both, long-term care, this care insurance, uh, and and that's nice. One of the things you could look at is to see whether there's some way to continue that coverage if you leave employment or retire,
Very good
uh,
point. Very good point.
uh, or if it can be converted in some way so that you don't have you're not your coverage is not interrupted in any way. Now that of course assumes that the policy that is provided in the group setting is in plain English is worth it to. Some of them have so many exceptions in it that you wonder, why bother? And I know that's the reason Jeff's on today. Jeff's the type of person that's not going to be involved with policies like that. Sometimes it behooves the individual to get, and even though they have that in a group setting, they still want to get their own individual coverage, because if they change employers or retire, as long as they're paying the premium, they're going to continue to get that coverage. One thing about, obviously, the earlier you buy this, the smaller the premium amount will be. However, Jeff, what about increases? Is it right? I mean, long-term care insurance companies can increase premiums over the years, can they not?
Yes, that's correct. Virtually all individual long-term care insurance is guaranteed renewable. And guaranteed renewable means, for those who don't know, it simply means that if you pay the premium, the insurance company must renew the insurance contract. Without going or naming any names, which is really not the forum to do such, there's a handful of companies out there that have assiduously and accurately priced their products appropriately and have never changed the premiums from what they had originally proposed to the insureds. A lot of people don't realize this, and I tell everyone that I meet that has a conversation like this with me is that you can call your respective state insurance departments and ask them to tell you about any rate increase histories on particular insurance companies' products. And if a person is looking at long-term care insurance and they're looking at a particular company, they could call that state's insurance department and ask them if they can give them a history of the rate increases on this particular product. And it might be a way to get a more informed understanding as to how the companies might treat you in the end. The main reason, and I'm not particularly intimate to this side of the insurance world, but there really are two factors why long-term care insurance premiums have gone up over the past few years. One is due to the low interest rates in our economy, and the insurance companies suddenly found themselves not being able to invest their assets and earn a kind of return they wanted to. And the other pressure up on the long-term care insurance premiums, which is sort of odd to understand, I've had a difficult time getting my hands around it, is that the life insurance companies assume that a certain number of people won't keep their policies every single year. So a certain number of policies will cancel year after year. People perhaps can't afford the coverage, or they pass away, or their needs change. Well, what's happened in the long-term care insurance world, and it caught all the companies off guard, is that people are not dropping their long-term care insurance policies. People are buying them and holding them to the degree that a lot of the life insurance companies that issue these insurance contracts were completely caught off guard. They weren't assuming they were going to have so many insureds remaining with them as the year went by. So just some simple shopping, some simple research. A person can get a good understanding of the entity with whom they're dealing and what they might be facing in the future as far as rate increases goes.
Well, that is not something I realized. That's a very good point. Calling the Department of Insurance, correct?
Yes.
And just asking about rate history. I vaguely remember years ago at a seminar someone mentioning that, but I completely forgot about that.
Sure.
That's a very good point.
Howard, may I interrupt real fast? It's asked the state to tell you about the rate increase history the company has had. So the state will tell you, yes, this company has raised the price on this particular product 6 times in the last 15 years, something to that effect. But that information is publicly available.
And that's and they can also tell you the increment, how much it went up.
Absolutely. Yeah.
Okay.
Yeah.
But in my own experience, mine has gone up. There's been 2 increases, and they've been very, very small. I think I've had my coverage now for about 12 years, almost, and I've had 2 increases, and I think it's been less than $10. So it's not a real big deal.
Okay.
I promised everybody on these webinars I would keep them to about 30 minutes, and we're at that. There is one more thing, one question we have, and that is the differences between Medicare and Medicaid. They sound alike, or not alike, but very similar, but they certainly are different programs. The federal government is involved in both of them, and one of them, the state government, is involved. Medicare is a federally administered as well as funded a program that I think everybody is familiar with. Certainly as they start, if they're over the age of 50, they know a lot about Medicare. And that starts at 65 years of age. But as we said earlier, it is not intended, nor does it really cover long-term care except for very short periods of time, and then only under certain circumstances. Then there's Medicaid, and that is a legal governmental marriage between the state government and the federal government. So the state of Florida, I'm assuming people who are listening into this are Floridians, although this would really apply to anybody no matter where they lived, in that when it comes to Medicaid, they have to look to the state and their guidelines, but Medicaid is not designed for long-term care coverage either, at least not in the usual sense of that word. You have to, there's certain ways to qualify that. In other words, there's income and also asset tests. So it's just not automatic and anybody can just get it. And in a lot of cases, not in a lot of cases, but it really is akin to welfare law. And it is not something that people should rely on, in my opinion. Not because it might not be good, but it might not be around when you need it. There is no guarantee that we're going to have Medicaid coverage like we have today later. People that are relying on that, and if that's all they can do, well, then that's all they can do. But if there's a way for them to acquire long-term care insurance, I would certainly encourage them to at least talk to their agent. Give Jeff a call. Jeff, this is a shameless plug for you at the moment. I've known Jeff for a long time. I know him to be an honest person that will give you the complete story, and he'll tell you what the premiums are. And Jeff, what is your telephone number?
Certainly, my mobile number, and that's the best number to reach me, is 813-545-9008. Once again, that's 813-545-9008.
And one last thing, for Stross Law Firm, we do not sell insurance. I do not make 1 cent from any long-term care insurance policy that is issued to anyone. I talk about it now, and I think it's as a public service. I think people should know what is available to them and be able to talk with people who are conversant in this subject. I know Jeff to be a person like that, and I would encourage all the listeners and the friends and loved ones of the listeners to have a conversation and then pick up the phone, give your agent, give Jeff, give somebody a call and start talking about it and see, can you get it? When should you get it? what kind of policy should you get, because we haven't talked about this, but there's so many things in this, but there's many different kinds of policies out there. It's not one size fits all. If you can't afford the Rolls-Royce long-term care insurance policy, and I'm using that term, I don't think the Rolls-Royce company really sells one, but in other words, a real premier super duper long-term care insurance policy you may not be able to afford, but you could get something of a lesser amount that still may be adequate or nearly so for your needs. So I want to thank Jeff and everyone for tuning in today, but certainly Jeff for taking his time to speak.
You're welcome.
You're welcome. And also for people, this webinar will be posted on our website, and that's stresslaw.com, and we're going to see to it that Jeff gets this recording too, so that he can post it on his website if he would like to.
Oh, thank you.
And if there's any questions that arise that haven't been responded to today, I encourage people to send us an email or call us at my office or call Jeff. Call someone that you trust and talk to that individual to get some unvarnished information about what long-term care insurance is all about and how does it fit into your estate planning and your incapacity planning. And again, Jeff, thank you very much.
You're welcome.
Our next webinar will be on May 20th, 2014, and we will announce that topic shortly. And again, thank you all for listening. Jeff, I'll say goodbye.
Thank you, Howard. Goodbye.